A terrific Tuesday morning to all. Let's get started and see where the market is so far this morning. Yesterday, we lost ground from the big pop-up we encountered on Monday, so we closed a little bit below 102.80. This morning's opening kind of starts to break the trend a little bit, or sideways trading. We're down from where we actually opened. We opened at 102.63. So as long as we can stay above 102.50 and then 102.40 at the outside, we should be okay. And keep in mind, the higher that the bond market is equals the lower that rates are. And rates are definitely underneath 4.5% at this point in time. So let's look at trading so far this morning. The red line shows where we actually opened. We popped above it briefly, and right now we're skidding below it a little bit. So again, as long as we can stay above 102.50, 102.40, we should be okay. We have some very positive economic news that came in today. So building permits came in underneath expectations, down a little bit. Housing starts were up a little bit, but not enough to cause concern or put too much pressure on bonds. But PPI, which is a measurement of inflation minus food and energy, the two volatiles, month over month was up. So this is inflationary, which is never good news for bonds or interest rates. And PPI year over year was also up. That's 1.5%. Again, this is a measurement of inflation, and a positive number is not good for bonds. Industrial production was actually also up a little bit. That was 1% over, or excuse me, 0.5% over expectations. So again, we've got a lot of positive news for the economy. With inflationary reads on PPI, that's going to put pressure on bonds and or interest rates, so be very careful. If we dip below 102.50, 102.40, lock them in, and have a fantastic day. I'll be back to you on Wednesday morning.